Hey everyone, Lethal here. So I wanted to show the two plays I had, and how I was using secondary markets to kind of front run the move. So typically I didn't watch secondary markets, but I know that we're at critical levels in terms of yields, and oil, which I'm going to talk about in this example. So for reference, I mean, the levels that we're at have just made the markets hypersensitive to the way they're moving. You can say that's due to the Iran war or, you know, COPC or like whatever FOMC. Like all of these events obviously can play a part. But to simplify it, while we're at these, extremely extended levels, there's ways that you can use it to, um, you know, kind of front run a move sometimes, because a lot of times they trade in sync, but sometimes there's a gap, and that's where you can kind of pounce, which I'm about to show. Okay, so you can see here in the morning on open for oil, this is oil and this is SPY. We were chopping here, right? So we were chopping, obviously there's going to be some like mild movements, but the reason I was focused on oil particularly today is because obviously before the weekend, oil was extremely high. Then the ceasefire thing got announced, it kind of dumped off. So I was just watching it and just happened to see this. So you can see actually here as oil starts like really dumping in the midday, that's when we start moving towards our high, right? And in hindsight, that would have been a good play for me to take. But the movement wasn't. I didn't know what to expect essentially, so I'm not gonna front on that. But you can see here, SPY keeps grinding towards a high as oil keeps going lower. So let's go over here, and you see here around 1240, right? Look here, we make a low on oil, 77.78. And look, I mean, sure, we slid down at the start when we were pumping on SPY, but as we get here, you can see the open or the high on this candle, looking in the upper left of this box, is 78.84. So we were basically slow grinding down for the good part of the lunch chop. And look, we just get a dollar candle here out of nowhere. And I just found that very odd. And the divergence of it is, look at SPY here. That candle was at 1245, and we didn't like really slide back down to the low. So that gave me confidence. But if you look at SPY here, look, it's 1255. We're making highs here, 1255.1. So you essentially had a 10 to 15 minute window of seeing that divergence, seeing it in reverse, and then that's when the sell-off started for the afternoon. And this one wasn't a major sell-off, but it was confluence just the fact that oil was going down the entire day. Looks like it bottomed, called a crazy bounce, and we hopped on it. And I apologize for the bare bones charts. Like I said, I usually chart at work, and so I don't have EMAs. I mean, EMAs and RSI is all I really use on my charts. But yeah, the point is that there was a divergence because the oil ripped first, and it was weird that SPY didn't react because it seemed like oil was leading the way on predicting the moves for SPY, right? So that's essentially all it was. Now, and then after market, Iran launched the missiles at us, and that like ripped oil back up. So I really wasn't watching that because I expected kind of Iran tensions to escalate. But that brings me to today, the 29th for FOMC. And if you guys don't know, for a very bare bones take, FOMC or high bond yields and FOMC rates kind of go hand in hand. Like a high bond rate is essentially a hike, even if they don't do it. So since they're kind of correlated, I was watching yields more today. And again, so for reference, 4.629 is considered a critical support, which I believe we were hovering around at open. And give me a second, I'm going to pull up another bare bones trading view chart in a second. But you can see, it'll be better when I pull up the overlay, that, and I just want to flag this before because TradingView doesn't, I have the bare bones version, so I don't have the overlay of being able to have two charts at once. I just have it overlaid on the SPX chart. You can see here, This is pre-FOMC, so it seems like the bond traders started pricing in that nothing was going to happen. And sure, at 2 we kind of went back up, but then it was like a sharp decline while war spoke until this point. And you can see we're below 4.629, and the reason I'm going to show this first is because you think of 4.629 on the 10-year as a critical level, right? Well, guess what else is a critical level? Something that we all probably know. SPY 740. Until we broke below 4.629 readily, we didn't pump above 740 the entire day, right? It was kind of like, yeah, yields were creeping up in the morning, so we were kind of steady selling off, and then the reverse happened, and then we got the real move. But I'll get back to the spike later. Let's switch over to the other chart. Okay. So you're gonna see here what I was talking about earlier. Look, yields jumped overnight again because of the Iran missile strike. And then we're kind of slow grinding up, and look what's happening to SPX here. It's slow grinding down, and then you can see as yields kind of start to flatten out and they're slowly curling. Again, there's nothing really to like dictate the move, but you're gonna see here now where yields really start getting action close to FOMC, because like I said, they're very closely related. And I have it on the 1 minute chart here so we can really see the dip. It's harder to see on the 5 minute on this overlay. But look here, 2 o'clock, the report comes out, obviously yields dip a little bit. And then as we go over here, Warsh begins talking, and the bond traders really dump this shit, because that correlates to when we get this pump. Now again, here's the divergence. You're gonna see here 1449. Look at this on the 1 minute. That's our low for bonds. We're sitting well below 4.629 at this point, and again above 740 as I said earlier. Now look, we start to get a spike here, nothing crazy, but a few minutes later again we kind of hit like a crazy spike, and I might have to go back to the other chart to show that what that is, but my point is we started to dip a little bit, sure, but you saw a move that was in contradiction to what it had just happened in a severe way, right? So it looks like it may have made a bottom, and this doesn't look like much at first, right? But it's the fact that it held, and again it didn't revert, and I'll have to go back to the other chart to check, but I'm pretty sure it's because it got near 4.629 and didn't immediately reject. That's what gave me confluence. But you're gonna see here, look, this is sell-off really started. The first red candle was at 1502, but 1503. So that means from 1249, 1503, you almost had 15 minutes. And again, you could have had a lot more time. And I know there's other factors. It could have been the market was scared that Warsh was like kind of, dancing his way around questions. And of course, there was Trump talking reckless about Iran and tariffs that came out later. But that's not the point I'm trying to make. I'm trying to say, again, a move contradictory to what had been going on prior, and then it didn't retrace, and now look, again, it's like I said, you had 15 minutes to get in if you saw that, and like we're somewhat confident that it would keep going. And of course, I didn't expect it to keep going like this, but it just keeps ripping, right? And look, we sell off, we reverses a little bit, look that did what it did. It bounced a little bit, but then again yields keep ripping, and then like we just keep tanking because we're so far above what the daily high was at that point that the markets are just taking everything in stride, the news, and the yields are reacting to that accordingly. But again, to summarize, the point I'm trying to make is there was a move that came and didn't move in tandem with SPY, and the fact that it came 15 minutes early-ish, just like the oil one, that's what you're looking for. And you don't have to know about key levels. Like I don't know shit about secondary markets. I'm watching them because we're at this very tense juncture in and the way the secondary markets and our market are stuck in this box, and we don't know what to do. So I don't think you have to know a lot about these. You just want to be looking for weird movements. See, you could have saw this dump coming, like breaking the lows, and maybe like played halfway up through here, even though it wasn't it looked like it was mostly moving in unison, right? But yeah, that's it. So let me go back just for further explanation. So if I go back to here, you're gonna see, okay, we said 49 we bottomed, and look, okay, so the dump started around 1503, or at least the sell-off, and look, on that, somewhere in here, but basically, you can see here, 1503 we were getting right about there, but let's see, 1505, again, we closed finally above that 4.629 level on this candle, and so as we broke back above that with like little to no resistance, that was the confluence to keep holding. And then look, we just keep ripping. And again, you can argue this is due to whatever, but the bond traders were pricing in Worcester's speech, and then all of a sudden they changed their minds before the move on SPX actually came. So I hope this is helpful, and I don't predict the strategy will be effective in a time that's not where, like a juncture like this, where, like I said, bonds and oil are at, quote, critical levels, and our market is very uncertain due to a lot of things. You can say Korea or whatever. And sorry for rambling, but I hope that this helps. Let me know if any questions. But again, to make it a very short sentence, we are looking for very weird reversals and whatever movements are happening on either oil or yields, and seeing if the markets have reacted to that. If it doesn't seem like there's any news and that move continues, you might be onto something. So I didn't make as much money as I should today. I had a very bad play in the morning, but that's besides the point. I hope this helps.